Kitco Mining Interactive Series, Copper, Investment of the Decade, Kitco Copper Masters Panel, is brought to you by Coppernico Metals.
Hello and welcome to the Kitco Copper Masters Panel, sponsored by Coppernico Metals. I am your host, Paul Harris, and today we aim to dig deep into some of the forces driving the copper space and pick apart some of the critical factors at play. Joining me in this task are some of the most influential voices in the space. Kathleen Quirk, President and CEO of Freeport McMoran. Kathleen joined Freeport in 1989, a member of its executive team for more than 20 years, becoming President and CEO in June. Freeport is the world's largest copper producer with more than 2 million tons of production in 2023. In addition to investing billions of dollars potentially in expansions at Baghdad in Arizona and El Abra in Chile, the company is also pioneering new sulfide leach technologies. We have Robert Friedland, founder and executive co-chair of Ivanhoe Mines. We could do a whole webcast about Robert's achievement, but let's stick to the fact that he's helped bring to the world landmark projects including Voisey's Bay, Oyu Tolgoi, and Kamoa-Kakula. Ivanhoe's Kamoa-Kakula complex came into production in the Democratic Republic of Congo and is one of the highest grade, lowest cost and lowest carbon footprint copper operations in the world, and one which is shaking up the copper world. And finally, last but not least, Colin Hamilton, MD of Commodities Research at BMO Capital Markets, which is one of the leading banks in the mining space. Colin is a metallurgist and leading copper analyst with over 15 years of experience in commodity markets. He leads BMO's market intelligence and price forecasting efforts with base metals and deep subject knowledge. Kathleen, Robert, and Colin, welcome to Kitco.
Thank you, Paul.
Thank you. Hi.
Now, before we start, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal, or investment advice. The opinions expressed here today are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, please visit kitco.com. And also, if you like what you see, don't forget to hit that subscribe button. Now, the copper market is expected to enter into deficit, which is forecast to increase to 5 to 10 million tons per year by the end of the decade as new demand gathers pace from energy transition applications and the power infrastructure required for the electrification of everything, including data centers, as well as emerging markets such as India, and, as Robert has pointed out in recent presentations, from military material. This positive market outlook has not necessarily generated a corresponding supply response, as there are relatively few projects in the pipeline, and miners appear to be holding back in the face of increasing risks, costs, and timescales of project development. Robert Friedland, let's start with you. In addition to the forecast supply gap by the end of the decade, what impacts do you think the new sources of demand are having on reshaping the copper sector?
Well, human evolution is just can be measured by the quantum of electrical energy used per person. And that's done nothing but go up throughout human history. So on the assumption that our species doesn't blow itself up in thermonuclear war, as we electrify the world economy, we're going to use a lot more copper metal. That's for sure. There's no doubt about it. And it's gotten harder to find new copper capacity. Everything about the enterprise is getting more and more difficult. And forecasts are interesting. Actually, no one can forecast the future. But we do know that today, we're about 5% off the bottom in the copper price in the last 30 days. We had a little flash panic in the world financial markets. But in mining, we have to look many years ahead. We have to look 5 years ahead, 10 years ahead. And those of us that are fortunate to have copper assets have a very, very bright future and a central role to play in the world economy, no matter how it turns out, short of thermonuclear war.
Thank you. Kathleen, Colin, anything to add to that?
What I would say, Paul, I think it's really interesting. I mean, as Robert stated, it's a simple story, copper. You can put up a chart showing global electricity demand and global copper demand, and they go hand in hand. And do we think we're going through a more electricity-intensive phase of growth? I do think we are. We're in a world now where we are looking at maybe artificial intelligence being the next geopolitical battleground. Now, for that to happen, you need grid resilience. And grids, of course, big consumers of copper. So I actually view grid upgrades as quasi-defense spending in the world. And what has been a China story, realistically, like many industrial metals over the past 20 years, is fast becoming a real global demand story. And that is, of course, straining the supply side. Now, you mentioned the deficits. What we know is those deficits aren't going to happen. We need a combination of things. We need more supply, and we will probably need to ration demand to a certain extent as well. Now, that only comes from price. And I think those dynamics can be very interesting in the copper market over the coming years.
Thank you, Colin. Kathleen, anything to add?
I agree with Robert's comments as well as Colin's. The thing that we're looking at here is the very early stages of demand growth for copper. All the things that Robert was speaking about, Colin was speaking about, decarbonization, electrification, connectivity, technology, all those things are going to be more copper intensive than what we've seen in the past. So we need to produce as an industry a lot more copper than we have in the past, yet it's more and more difficult. And we've got a lot of things in the hopper here at Freeport, which we'll talk more about. The industry is working hard to increase supplies, but it's a real challenge. And if it was easy, it would have been done already. But we know this business is difficult. We've got a lot of motivation to continue to grow our copper production to supply this world, which is better off because of copper.
Okay. In economic terms, one would say that copper supply is relatively inelastic in the short and even medium term, particularly as producers have been exhibiting capital discipline in recent years. Kathleen, Freeport is looking at some multi-billion-dollar investments at its operations. Why have you decided now to sort of break out the checkbook? Can you talk us through some of the factors that will figure in those decision processes?
Yeah. Well, I think if you look at our industry, there has been a very significant motivation by our industry going back many years to grow copper supplies. And it's a long-term business, as Robert was referencing earlier, and it takes multi-years of exploration, planning, development, community work, social license to operate. And it starts with really the resource. And the industry has not been sitting on its hands. So the industry has been working hard to develop new supplies of copper, but there are challenges. At Freeport, we have been developing or transitioning our big operation in Indonesia at Grasberg from a surface mine to 100% underground mining. And that was a 20-year investment period. We transitioned in 2019 and started ramping up right during the pandemic in 2020. And now we have gotten to a point where we've got sustainable, long-term, low-cost production there. But it took 20 plus years to plan for this and develop the resources. And in parallel with that, Freeport has assets in the U.S. and in South America, and we've been working on optionality to develop those resources. We have, as you referenced, the project in Arizona at our Baghdad operation, which you start with the reserve. We have a very long-lived reserve there. We have an established operation, established franchise that has good relations with communities, local communities, which is so important. But some of the barriers for us is it's not really capital constrained. It's more related to the labor situation in the U.S. and the ability to develop that project in an efficient way with limitations on construction labor and other skilled trades. So one of the things that we're doing, and technology is a theme throughout all of our projects, we are going fully autonomous. We're converting our whole truck fleet there to fully autonomous to help us leverage technologies and automations, reduce reliance on labor to bring that project to fruition. And so that's what we're doing really is at this point in time is de-risking the project. As we look forward, we're going to make an investment decision next year. I think that project will be green lighted. We've also got a major project in Chile where we're looking to dramatically expand our operation there. We have an established presence, and we have had for some time, but it's been a smaller operation. And now with the drilling that we've done over the years, we've got an enormous resource that supports a major investment. So we're looking at a potential for $7.5 billion investment there. The economics are good. We've been really focused on making sure that we have the project well defined, we have the costs well in hand, because the last thing we want to do is embark on a project and not execute it well. We want to make sure the project has adequate returns for all of us and our stakeholders, and it has community acceptance. But it's a long-term project with the permitting processes in Chile. It's likely 8 years out before we can get that project up and running. The thing that we're doing that has the most nearest term impact is really exciting at Freeport. I know we'll talk about it some more, but this is the technology-driven innovation around our leach operations. And Colin was talking about some of the things that the industry needs to do, and really necessity is the mother of invention. So
well, I want to get to that a little bit later on in the conversation, if I may, Kathleen. Sorry to sort of cut you off there.
Okay. But the point was, this was not a sudden thing of taking out the checkbook. These projects take long-term planning, and we're now in a position where we're starting to make some investment decisions around those plans.
Excellent. Now, these are sort of brownfield projects, and I think it'd be fair to say there's been a relative lack of appetite for greenfield investments. Robert Friedland, you've been perhaps made one of the most famous greenfield developments recently, and that is obviously Kamoa-Kakula. Why do you think there has been a lack of greenfield project developments?
I knew about the Democratic Republic of the Congo. It was the largest producer of copper on planet Earth for hundreds of years. It was only supplanted in the mid-1960s when porphyry coppers got developed. The Democratic Republic of the Congo has the highest grade and no ice or snow and hydroelectric power. So you can produce copper there prodigiously. And it's just risen to being the second largest producer of copper in the world after Chile. And so we have to go to where the copper is. And then, of course, we're utilizing the sum total of technological development. As Kathleen was saying, there's leaching technologies and all manner of new technologies like autonomous machines. And those autonomous machines run wirelessly underground or on the surface. They need big servers, they need computational power, all of which needs copper. Right now, we're rebuilding colonial era hydroelectric capacity in the Congo. And at the Inga Dam, one of our rotors has about 100 tons of copper in it, just to spin and make hydroelectric power. So you need copper even to set up hydroelectric power. I think neophytes or people that are outside of the industry don't really understand the enormous amount of capital and dedication and effort it takes to bring on new copper production. And if Freeport and Ivanhoe and our other brother and sister mining companies manage to do that, we'd be doing humanity a great favor, because the only other way where, this deficit is going to have to be adjudicated by price. If the price goes higher, it has to stay much higher and for a very long time before you can stimulate the construction of low-grade porphyry coppers in the Andes, for example. So thank God we have wireless technology and autonomous technology and developments in metallurgy so that we can try to actually fill this gap. But it's going to be a Herculean task for the industry to do this. And one of the greatest assets for a company like Freeport or Ivanhoe is its people. We have a shortage of young people that are metallurgists, mining engineers, geologists. And you can't just dial them up. You got to get them to go to school and study metallurgy and geology and all the rest of the process engineering that goes through this effort. And so it's just now that we're beginning to see a panic. We're just now beginning to see, sort of like Indiana Jones in the Temple of Doom. The walls are coming in, they start to move and crush us. You have to dive under huge stone balls that are rolling down a ramp, or we have to dive underneath a trap door that's coming down to close. For example, China just said they're not going to allow any exports of antimony, which is used to make explosives in military applications. 50% of the antimony in the world comes from China. Another 30% comes from Russia. And most of the rest of it comes from Tajikistan. And so the skills that you need to mine antimony are the same as the skills you need to mine copper. If you can mine copper, you can mine gold. If you can mine copper, you can mine silver. But the king of metals, for sure, is definitely copper. It would be nice to get some antimony or gold with your copper. We have just a massive undertaking ahead of us as an industry to keep the price at a reasonable level. Like, I don't know, maybe $9,000 a ton or $12,000 a ton. That's a price where humanity can afford the metal and where we hope we'll be able to produce it in sufficient demand to allow everybody in the world to enjoy the benefits of electrification.
Okay, it's not just expansions where companies are looking to spend. BHP and Lundin Mining recently announced a $4.5 billion Canadian takeout of Filo for its Filo del Sol deposit in San Juan in Argentina. This is notable for many reasons, one of which is that it's pre-resource and it's at a much larger dollar amount than most other recent copper space transactions. Now, Colin Hamilton, is this deal a watershed moment for the copper space and its structure? Will it change the way companies look at M&A and perhaps allow companies to get more aggressive?
I think it's interesting, Paul, in that there's definitely more interest in M&A coming through at the moment for a number of reasons. I think it's quite important, picking up on some of the things that Robert and Kathleen said there. At the moment, if you're a company, there's pressure to grow, but building growth right here, right now is hard. As Robert said, it takes capital, it takes dedication, and there's constraints. As Kathleen noted, the shortage of people, the permitting problems. Actually, building that growth is hard. So shareholders now saying, yes, we're in that temple of doom. The walls are closing, and we want more copper. But it's actually to get more copper overnight is unless you go and buy it. So an easy way for companies to grow is to go and buy de-risk copper now. And then we'll talk about the growth prospects in a minute. What's interesting, helping to bolster this M&A cycle, I do think you're seeing higher through-cycle pricing used by a lot of companies now, and that justifies these transactions a little bit more and also leads to some of the higher pricing that we might have seen than in the past. Shareholders don't want balance sheet strain, though, so again, it has to be de-risked a certain way. Now, then when we look for future copper, I think what you are likely to see, there's so few potential development copper projects out there that can be brought to market in an appropriate timescale, and also that don't have the geopolitical influence from maybe the segmenting world that we have. So with that, I think you are going to see companies maybe stake out a little bit more optionality for the future, and I would argue that's what we've seen with the Filo transaction.
Okay, well, let's talk about some of the sort of the financial metrics. Ultimately, the aim of the business for Robert, for Kathleen and others is to make money for their shareholders. The capital intensity of project development is increasing, with figures of $20,000 to $30,000 per ton of annual production capacity increasingly common. This, on the one hand, means that fewer companies have the financial ability to develop large projects without potentially compromising their future if things do not work out to plan. But it also means that the internal rate of return, the thresholds are perhaps more difficult to achieve unless there is a higher copper price. Robert, you mentioned perhaps $9,000 to $12,000 per ton. Kathleen Quirk, will high capital intensity impact the ability of the sector to bring on new production? How will the sector seek to cope with this?
I don't think the industry as a whole is capital constrained. There is a desire and capital resources from the industry to invest in new copper projects. Some of the smaller companies may need to take on partners, may need to find creative ways of financing projects, but there is capital available to the sector The challenge we have and that we face is more of an absence of new discoveries. If you look at the chart that shows the most recent discoveries of this industry going back for decades, there haven't been that many. And Robert can talk about the ones that he's been involved in, and he's had a great success. But many of these projects or these discoveries have been known about for a number of years and have not been developed for a variety of factors, community acceptance or geopolitical issues or where they're located. So I don't think it's a capital constraint for our business. We're all focused on capital cost inflation and looking for ways that we can work to mitigate and make our business less capital intensive. But the facts are, capital costs are up 30% or more over the last few years, and we as an industry need to do better about planning projects and executing projects, as you've seen of what's happened in certain projects around the world recently. But I don't think it's an issue around capital. I think it's more of an issue around the lack or the absence of actionable projects today.
Okay, the BHP and Lundin Mining deal with Filo. Obviously, they're looking at joint development. Will joint developments become more of a thing in the copper space? Colin, Robert?
Oh, you're getting me very agitated. So we'll have to calm you down. Rio Tinto bought into Mongolia. It only took about 15 years to develop Mongolia. This is not the first time a major mining company has paid a few $1 billion to a junior. A couple $1 billion is nothing to BHP. Nothing. It's a piss in the ocean. So it's not a seminal transaction. Now the word comes at building a new copper mine at 15,000 feet elevation. So Oyu Tolgoi was at 2,000 feet elevation with a railroad to China, and it's still taken well north of 15 billion in capital, probably approaching 20 billion in capital, and 20 years of work to bring that into production. Now you imagine building a mine at 15,000 feet in the Andes, in near vertical real estate. There's virtually no air up there. You have any idea what the actual capital cost would be to build a world-scale copper mine at 15,000 feet? And when it'll actually come on stream? I'm scheduled to be close to 100 years old before that comes on stream. Don't get all hyperventilated about a major mining company desperately buying into an actual discovery. Now, that's only the beginning of the problem. Like, the Chileanos hate the Argentinians and vice versa. You have to figure out how to get that copper concentrate off that mountain into the seaport. It can be done. But the actual capital cost, you understated them, my friend. If you look at Quebrada Blanca and you look at Quellaveco, the capital cost is over $40,000 a ton per annual ton of capacity. That's an astronomically high amount of capital to bring on new production. In today's world, we need much higher prices, and not for 5 minutes. We need sustainably higher prices. Now, things are a little different in the Congo. We're coming in at $7,000 a ton of annual capacity because the grade is so high and there's no ice and snow. It's not the same everywhere. But if BHP and Rio Tinto get into Herculean efforts, and they have big balance sheets, and Freeport will be able to supply some of the requirement. And China is doing a lot. And Zijin has become one of the largest copper producers in the world out of nowhere. They're going to break 1 million tons a year this year. Humanity will find a way to do it, but I suspect the price range will be much higher than 12,000 a ton. And it'll have to be sustained much higher prices because the Fed is, the Fed's meeting tomorrow in Jackson Hole. And if the chairman of the Federal Reserve Board cuts rates, the dollar will get smaller, won't it? And that means the dollar-denominated price of copper will go up. And so right now we're in a nice, comfortable range around $4 a pound. That's a good price for Freeport McMoran. But, it took decades to build Grasberg. It was one of the greatest human efforts imaginable to build a Grasberg. I always say it's like a woman having a 100-kilogram baby or a man having a 10-pound kidney stone. It's really hard to bring a mine like that into production. And you're waiting for the next one and the next one. We need several of them, several more at that scale. We need 10 more Grasbergs, 10 more Kamoa-Kakulas, and that's going to be really hard. And that's why the majors are taking, sort of optional positions on much, 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 much higher copper prices. There's no way that BHP could have bought Oz Minerals at the price they paid if they assumed that copper was going to be $4 a pound. I doubt they could have justified it if they used $6 a pound in their model. But the measuring tape is going to change here when U.S. rates come down. You already have gold at the highest price it's ever been in nominal terms. So I know that the analyst from BMO has to be conservative and scholarly, but actually the actual price will shock you. We always say to the analysts are like eunuchs in a harem. They've seen it done. They've watched it done hundreds of times, but they can't do it themselves. If you want to go out and buy 15 Andes in Argentina, do you have any idea how hard that's going to be? So don't wax breathless about a few little deals. Just look at the big position. Freeport can grow their production because they have the people, they have the management systems and the experience, but it's going to take higher prices for a long time. I mean, you can't do it on a 5-minute spike. Price is going to have to stabilize for a year or two before boards of directors take big decisions. And so that's why the future is going to be so interesting and colorful. It's the revenge of the miners. And it's in time that we enjoy life a little bit because we suffered for decades and we deserve our just reward.
Okay, Colin, you wanted to add something there.
Just a couple of things, and I do take Robert's points on board. I think it's absolutely fair. What have analysts been doing? Consistently pushing up what those long-run numbers are, but they're arguably not high enough yet. A couple of things. I mean, on capital intensity, it's not for like anymore. If mining companies are doing things in the right way across the world, they're adding a lot more social infrastructure than they would have had to do in the past. But that's helping push up this rise in capital intensity. Now, point was made, balance sheets. And the problem, I think, with financial markets is the lack of trust in the capital numbers that are put out in the first place, because they inevitably go higher. And with that, that's why shareholders are going, oh, please don't put the balance sheet under pressure. You did it last time. We didn't like it. We like the returns you're going to give us in this revenge of the miners period. So,
down boy, we didn't do that in the Congo. And everything we built ahead of schedule and under budget or dead on budget. So say it, otherwise you'd have a real analyst,
I fully agree, Robert. I mean, phenomenal development. But a lot of the other, if you look at the copper mines developed over the past 10 years, and you look at what the historical price would have, the incentive price would have needed to make an appropriate hurdle rate, half the mines built in the past 10 years don't make a hurdle rate at today's copper price, which plays into exactly what Robert was saying. But this is why balance sheets under pressure still scare people, which is why if we go back to copper mines that were successfully developed over the years, they've generally been joint ventures. They've generally been spreading risk across balance sheets to get things done. Also leads to less stubborn decision making in many cases, and that's how you get the response coming through. Not everyone has been as successful as you, Robert, in bringing that on.
Well, Kamoa is
joint venture. It's also a joint venture. I mean, in oil and gas, the super majors always joint ventured offshore platforms. If you go to the North Sea, you'd see Exxon and Shell and BP joint venturing things. And as capital costs go to infinity, it's probably true that joint ventures are going to be more common. Nonetheless, we need much higher prices sustainably to develop low-grade porphyry copper mines at high elevations in the Andes. Now, we might be able to do something. The Freeport has a huge advantage in that it owns legacy assets. So if you own legacy assets, brownfields expansion is a lot easier to achieve than greenfield construction. And so, in 5 years, the Congo will be an incumbent. There's 2,000 megawatts of hydropower coming from Angola. Congo is available 2 million tons, 2 million tons, 3 million tons, 4 million tons. 5 million tons of copper. It'll happen. That's why the U.S. government is to veto Carter to get materials at the Congo and up the coast. So, yeah.
Okay, we're going to have a lot more discussion about price, but first, we're going to take a brief break for word about our sponsor, Coppernico Metals.
In your slide deck, you say Coppernico's goal is to become a top-tier discoverer of high-quality copper-focused assets. Why do you believe your flagship Sombrero project qualifies, Ivan?
Oh, there's about 9 years of working on this project to get it to the drill-ready state, and we got a chance to collect tremendous evidence on surface and indications of subsurface evidence, as well as some historical drill holes on the side of a very, very big skarn system with potential big porphyry targets as well. The project's located in southern Peru in a place called Ayacucho, where very large mines are nearby, such as Los Chancas, the well-known Las Bambas, Tintaya, and Tecapay. And this project has a lot of the same rocks. It was formed in the same era, which is Eocene. It has similar grade and mineralization and a really similar rock compositions that we see next door. So it's a really, really great analog to world-class mines nearby. And that's why we feel this could be a top-tier asset globally based on the evidence we've seen so far.
Welcome back for part 2. We really appreciate our sponsor for supporting the channel and helping to bring you this Copper Masters panel. Now, Robert's touched on this many times so far in this conversation. Let's talk about the copper price, and particularly the long-term incentive price. It has been around $3.75 to $4 per pound for a number of years, but we've been well past that level for a long time now, and few developments have been started, in part because rising costs have squeezed internal rate of return for projects to under 15%, the threshold that many companies have. Colin mentioned this in his comments just before the break. Colin, let me start with you here. What do you think is a realistic copper price to incentivize new projects?
It was interesting what you were saying there, but I remember when I started out my career, the consultancy I was working with at the time, people pushing back on pushing that copper price to $1 a pound of all things in the long run price. Now, you look at it, since then, the top end of that cost curve has gone up by almost 300% for a whole number of reasons. So we're seeing an industry with structural inflation well above standard US CPI. And that's where I think much of the analysis arguably is going wrong. You do need to be north of $4 now. North of $4 to get anything built. Now, you could almost make the argument that for a Chinese-funded project or a project in the DRC, as Robert alluded to, you maybe need a lower through-cycle incentive price. But to get a Latin American project built now, that is going to be expensive. And I do think you're starting to see companies use near $4.50 in many cases through-cycle price to justify those projects. The other thing I think we all have to think about is supply probably isn't going to fill all the gap. So substitution pricing does play a role here. We do have potential substitutes. The aluminium, you need a higher cross-sectional area. It can't be used everywhere. But is that necessary evil to try and balance the books? We will never have big deficits and negative inventory. The market will adapt. So we would say copper 4 times the aluminium price. That's where you're starting to get certainly some of the substitution pressures coming through. What it does mean, though, is that aluminium cost structures and particularly carbon pricing, very important for the copper price in the medium term.
Well, let me bring in Kathleen here, because you've got a slide in your deck talking about the potential expansions at El Abra and Baghdad. And within that information, you include the incentive price for each project. How do you view incentive prices, and where do you think the copper price is going to go?
Well, let's keep in mind the projects that Freeport has are brownfield in nature. Robert talked about that earlier. Where at Freeport, we're leveraging existing infrastructure. We're leveraging our people. We're basically doing these projects in places that already have operations. So they're not a greenfield project would be much, much more capital intensive and require higher prices. But our brownfield projects, and they vary from project to project, but generally you're in the $3.50 to $4 range based on today's capital cost requirements. We don't have in the U.S. and in South America, we don't have the high grades that you have at Grasberg or in the DRC. So it does require all other things being equal, when you look at a capacity cost per ton of copper, it is a higher cost. But in the $3.50 to $4 range for brownfield projects, we can move forward on those. But they don't happen overnight. They take time. They take a lot of planning to be able to execute them efficiently. But it's going to take more than brownfield projects to supply the growth and demand that's coming for copper. And that's what we're really energized about at Freeport, is looking at technology and how that can help us. We've got enormous resources that are in places where we've got established operations. But when you look at today's situation, today's cost structure, the labor intensity of our business, it becomes higher and higher costs as you go out over the long term to be able to move product longer, move the rock longer distances. And so what we're doing at Freeport, we're very energized about, is around technologies and about automation, to really think about how we change our industry to becoming less capital and less cost intensive. That's not going to happen overnight, but it's something we're working on for the long term, because we see a need for our industry to change the way we've operated over the past 100 years, and to really look for transformative technologies that have happened in other industries that we can bring to bear to produce copper at its lowest cost that we possibly can, to serve societies that are going to need more of it. Robert talked about prices to be able to deliver to society the kinds of big improvements in lifestyles that copper brings. And we want to produce it as low cost as possible. And we're going to need technology as part of the equation.
Now, thank you. Robert, you've famously said that you're going to need a telescope to see the copper price in the not too distant future. What kind of telescope are we talking about? A Hubble Space Telescope? Are you looking at it to go significantly higher? You mentioned earlier in this conversation $12,000 a ton, which is, let's say, 25% higher than the high it reached earlier this year. How far do you think it needs to go?
Only God knows, and she might change her mind, say all kinds of strange to pull the beard of analysts. So don't quote some silly thing I said in the past. I tell all kinds. What I can tell you is that what Kathleen said is true. There is the potential for technological development and revolutions. I'm happy to tell you that we have people from Silicon Valley, and we have BHP and Rio Tinto, the two largest mining companies in the world, and Ivanhoe Mines, having invested in our new rock crushing and grinding technology. We can crush and grind rock with a tremendous reduction in energy requirement and much less capital. So the mining industry is working very hard to find new ways to crush and liberate rock. For the last 1,000 years, we used compression to break big pieces of rock into little pieces of rock to liberate the metal. Now we're using tensile force to pull the rock apart. And that's a technological way that can help. And leaching of metals, in copper leaching can help. But there'll be a tremendous reliance on disruptive technology to get us to the right position. I'm happy to say we also got support from Newmont Mining. They're an investor also, the largest gold producer. So the industry will get together. We're in discussions now with Elko about finding a better way to mine. And we're going to need all these things. We're going to need more mines. We're going to need technological disruption. We're going to need the analysts to throw away their models, because their NPV models are really silly. You build an NPV model at $4 copper, you apply an 8 or 10% rate. If it's in the Congo, use a 12% discount rate. There's nothing left after 10 years. And with that silly model, nobody can justify building a mine. So first, we have to shoot all the mining analysts or put them down at the bottom of the sea. The Chinese don't build those MPV models. They just go out and they're the high bidder to buy the mines. And as you know, the Chinese completely dominate the supply chain because they were just more intelligent than Western investors. They just went out and bought whatever they needed. without doing an NPV model. So all this discussion about incentive pricing, what a silly thing to be talking about. And modeling and trying to find the price. Forget all that. The mining industry needs political support. It needs economic support. It needs to get a lot of young kids in education. It needs new technology. And it's going to be a lot like America's space race. When John F. Kennedy said, why are we going to the moon? He said, we're not doing it because it's easy. We're doing it because it's hard. We're not going to have a peaceful life for 8 billion people unless we have much more copper, 50% more for sure in the next 10 or 20 years, maybe 100% increase in production. And when you're talking about substitution, that's just silly. What about depletion? The world's mines are dying every day. You mine the high grade first and the grade is dropping. So there's just all this noise. The real message for your viewers is we're in the real world here. And I got to tell you, it's really, really, really hard to find a big copper mine and to negotiate with the government. And if you look at the work that we did to get Boise's Bay built in Canada, it was 9 years. Or Richard had to go back and forth to Indonesia for years, convincing the Indonesians to be reasonable, to bring on the capital to build Grosberg. So again, this is like having a 100-kilogram baby. It hurts. And what you need to tell everybody is throw away your models. It has to be done. It's going to be hard. And the correct answer is to incentive prices higher. HIGHER. How much higher? It depends on, the dollar. Maybe the dollar is going to turn into toilet paper here shortly. Both the Democrats and the Republicans are talking about supporting Bitcoin. I can't think of a better way to destroy the US dollar than to have the United States government printing Bitcoin. So there.
Okay, now you've all mentioned, you've all referred to the lack of new projects, the lack of exploration. In general, Kathleen, you mentioned that Freeport does a lot of exploration. I know, Robert, Ivanhoe, you've done it. You do a lot of exploration. You've got the Western Forelands discovery coming up along very nicely. But exploration amongst the juniors tending to trend downwards, and it's increasingly difficult for them to finance exploration. So, Colin Hamilton, two-part question here. Why are funds not flowing to explorers, and how important is that? Are junior explorers no longer part of the future of finding new copper deposits?
No, there's always a space for the junior mining industry. What I would say, though, is there's been limited success with Northbrook exceptions, Kamoa-Kakula being obviously the one of them. And Kathleen mentioned before, if you look at the new discoveries coming through, there's not been that many. Copper's pretty well explored for, and that's the general view in the market. So funds don't flow. Now, we have a lot of copper projects in the pipeline that could be developed. I think, to the points made before, it's more about getting those projects we actually know about the market, because they're the best ones we have. Getting those to market is probably more important. That's why you're seeing a little bit less funding coming through for the junior side.
Well, there's another problem, and that is you have to have about a $2 or $3 billion market cap, because shares are all traded by computer now. Human beings don't make decisions. It's all done by Invesco. So if you're a junior mining company, you got a $200 million market cap, there's just no way you can raise the money. You can't even do a roadshow. There's nobody to listen to your story. When I was a kid, it was possible to create a junior mining company and go out and get somebody to believe your story and to fund it. And out of every 100 junior mining companies, 1 or 2 or 3 came up with something that became a mine, and they overcame the miserable existential odds. But today, if I was a kid, I wouldn't start a junior mining company because of the way the capital markets are constructed. The only people that have been funding the juniors are the Chinese. They went out there and they bought them all. And now Canada and Australia and the United States don't allow Chinese funding of the junior mining industry. And so life has gotten really, really tough at the bottom of the feeding chain.
Now,
we are continuing to partner with junior mining companies strategically in places where we see opportunity. I think it still is an important part of the industry. But there's been a lot of money over the last several decades invested in exploration, and we don't have a huge amount to show for it today. And so exploration is important. It's going to continue to be important. We need to continue to do it, but we also need to allocate capital to technology development that can help with exploration, but also help with how we operate our assets. And so I think the mindset of the industry needs to move a little bit more to not just traditional exploration, but how do we change the success rate from what we've had in the past to using technology now to not only find things and develop things more quickly, but also to operate more efficiently. And I think, when we talk about exploration dollars, we need to think about R&D dollars as well.
Okay, now, Kathleen, one of your recent forays into the junior space is with Max Resource here in Colombia, where I'm based. But I want to talk about some of the leach technologies you're developing. You've referred to them a couple of times during this conversation. To what extent is the strategy there to potentially alleviate some of the pressure for you to make new discoveries or indeed buy other assets? Or is that really to extend the life of existing operations?
Well, when you look at exploration, we're sitting here at Freeport with 40 billion pounds of copper that is sitting in leach stockpiles. So the material's already been placed into stockpiles. And based on our current reserves, we don't have any of this material in our reserves because historically it was thought that it couldn't be recovered. It already had gone through the leach cycle and it recovered copper, but there's a lot left to be recovered. And so now with new technologies, we're going back into these stockpiles using new tools, data analytics, new ways of accessing the copper that's still sitting in those stockpiles and recovering more. And so we've got the equivalent in terms of our targets. We've already achieved 200 million pounds per annum from this initiative, and we have targets to go as high as 800 million pounds from this initiative, which is the size of one of these mega mines that today costs $10 billion. And we've got it sitting here in our stockpiles. It's low cost because the mining has already been done. We think we can produce it at less than $1 a pound, but it's requiring some new technologies and some new innovations. And we're leaning into those and we're making progress. It is the single most highest NPV opportunity within our portfolio today. And so that's why we're so excited about it. We're really allocating a lot of resources to it to make it happen, because when we think about the lack of discoveries in copper over the last several years, what really it points us to is getting more out of the resources we already have, improving the recoveries from the resources we already have. And it's sitting right there in front of us. Most of this is in the U.S., where it doesn't require permitting or any type of new hiring of people. It's more technology driven, and so it checks all of the boxes, and it's going to be an important part of our growth going forward. And we're allocating resources very aggressively to move this forward. It's not requiring so much capital, but to Robert's point earlier, talent. And not only our internal talent, but we're bringing to bear resources from different industries to help us with this, because it's so important to future copper supply, particularly in the U.S.
Thank you, Kathleen. Let's stick with the subject of technology. Kathleen, you also mentioned in your comments that the need to increase the success of exploration. And Robert Friedland, you're very much at the forefront of that with some of your other companies, such as HPX, for example, and its Typhoon geophysics system. What other technologies do you think are coming forward to improve exploration's chance of success?
Well, I'm very happy to say we formed a joint venture 50-50 with BHP in Arizona to find copper mines using Typhoon technology. We inject an enormous amounts of electrical energy into the earth. And if there's copper or gold or other electrically conductive metals, we have a much better CAT scan or MRI, much higher resolution than was obtainable in the past. So the Oyu Tolgoi copper mine was discovered by that technology, and we've formed a 50-50 joint venture with the Kingdom of Saudi Arabia over an area a little bit bigger than Switzerland, about 50,000 square kilometers, and we're started to survey all their historical gold and copper mining areas where we think we can find some elephants. That's being done in Ivanhoe Electric, which has control of this Typhoon technology, which we developed over 19 years of intensive efforts funded by primarily the French government. 50% of the R&D cost was extended by the French government, even though we're an American company. And then there's a new set of technologies with a similar technological background to crush and grind rock. And this has to be done. And it will be done. And we'll be talking a lot more to the world about it in the near future. So for those of you that are interested in the coming technologies, I'm robert@ivanhoe.net. Send me an email. Someday we'll do a Kitco presentation all about it, but not today.
Absolutely, we'll hold you to that. Now, financial market interest was a key factor in driving the copper price over $4 a pound during the super cycle sort of 15 years ago or so, and maybe earlier this year too. Colin Hamilton, to what extent is financial interest, paper copper if you like, driving the market or a factor in the market today?
It's always a factor. It can drive dislocations away from fundamentals. You would argue you saw a little bit of that earlier this year when we had a return of macro asset allocators who are now the marginal investor in many ways in copper, coming in and saying, well, we want to price in that copper demand that we all know is coming 3 to 5 years down the line. The problem is the physical market of the second quarter just couldn't cope with that price rise, and then Chinese fabricators were not able to pass it through to consumers. Now what you've always had is a 180. You've got the physical market definitely starting to look better in China, that premium rising. You're seeing those discretionary Chinese buyers coming back at the same time as the financial markets panicking a little bit about global growth. Financial markets will always be there. They will amplify cycles. They will drive dislocations. They will drive investment opportunities. Now, whereas I said, the copper market will be priced by the physical market of today. For an equity perspective, though, back to some of the points we raised, the financial market should be looking towards the future and what sort of through-cycle price levels we are going to need to see to try and solve the clear problem that we have in this copper market. So that's where I think the opportunities will lie more. One other interesting thing about financial markets, and it kind of leads in from what we've been talking about there, financial markets still think the mining industry cannot cope with capital risk, but do think that there's a huge opportunity from technological improvement, which is, I think, what our Kathleen and Robert were pointing to very nicely. That's where the opportunity really comes in this mining sector.
Thank you, Colin. Now we're right here. So in closing, I want to ask our panelists one thing to watch out for in the copper space in the next 6 to 12 months. And let's start with Kathleen Quirk, please.
One thing. Well, I'm gonna get to the fundamentals, which is soon we're gonna have peak mine supply, and we've got to find ways to get more mine supply as we go forward.
Thank you, Colin Hamilton.
Okay, I'll take it the other way. I'll take the demand side. I think copper is such a simple story. It's down to global electrification. I still don't think the wider markets have realised that we are going to be in this more electricity-intensive phase of global growth for the foreseeable future. So I think as you get electricity demand numbers ramped up for future years, that will be the key thing to watch. And I think that is imminent for a lot of the macro analysts out there.
Thank you, Colin. And then finally, Robert Friedland.
Oh, we're talking to some of the biggest technology companies in the world, and they're in a panic. The United States alone is going to face a near-term shortage of electricity. And most warfare now is driven by drones, but the drones are directed by artificial intelligence and servers. And so the electrical demand for AI and military applications is just basically infinite. If my drone has less latency from a satellite signal than yours, you're dead and I'm still alive. So you're all aware of world tensions, and you understand that the Ukrainian conflict is a huge test bed for new military technologies. Basically, great big ships at sea are obsolete. They can be taken out by a little drone, but that's all energy intensive. It's all great big data centers and demand for electrical energy on a national security basis. And so the world keeps on creeping up and doing freaky things to you. None of the analysts you can point to ever predicted that oil was going to go negative. Have you ever seen a report from a major bank that predicted oil was going to go negative? And when oil was minus $20 a barrel, did you see any reports predicting it was going to go back to 100? So it's just fruitless. You just have to calm down and look at the big picture. The mining industry has been underinvested for decades. The incumbents have an advantage in people, personnel, and knowledge, and they will be the first to adapt the technology because we have to do it. And we've seen Zijin mining grow enormously out of nowhere. The Chinese can fabricate cheaper and faster than anybody. They can build a navy or a warship cheaper and faster than anybody. In the West, we've lost a lot of our capability to do anything. We don't build nuclear power plants in the United States. And so it's going to be a bumpy ride for those of us in the West. And there'll be a series of rude awakenings as people realize nothing is going to happen without the rescue of the miners. This is the revenge of the miners. And sorry, guys, but what I'm telling you today will still be true tomorrow and the next day. This ain't changing for a long, long time. So every day you should fall down on your knees. If you're American, you should thank Freeport for even existing, because America doesn't have very many mining companies. There's rare as hen's teeth, and Canada lost most of their mining companies. They were bought by somebody else, and all of a sudden governments are freaking out and just toss away your NPV models and all your talk about incentive price. Put on your seatbelt and get ready for a bumpy ride. And you better pray for the miners, because we need all the help we can get.
Okay, well, unfortunately, that's all we have time for today on Kitco Mining's Copper Masters panel. So I'd like to thank Kathleen Quirk, Robert Friedland, and Colin Hamilton for joining me. We're now going to go to a special interview by Kitco's Michael McRae with our sponsor, Coppernico Metals.
Kitco Mining Interactive Series, Copper, Investment of the Decade, Kitco Copper Masters Panel, is brought to you by Coppernico Metals.
One of the key determinants of junior resource success is whether the team has done it before. Ivan Bebek is chair and CEO of Coppernico Metals, which is focused on copper projects in the Americas. Ivan used to head Caden Resources, which sold to Agnico Eagle for $205 million. Coppernico is ticker COPR on the TSX. Ivan, welcome to Kitco.
Thank you so much. It's a pleasure to be here.
In your slide deck, you say Coppernico's goal is to become a top-tier discoverer of high-quality copper-focused assets. Why do you believe your flagship Sombrero project qualifies, Ivan?
Oh, there's about 9 years of working on this project to get it to the drill-ready state, and we got a chance to collect tremendous evidence on surface and indications of subsurface evidence, as well as some historical drill holes on the side of a very, very big skarn system with potential big porphyry targets as well. The project's located in southern Peru in a place called Ayacucho, where very large mines are nearby, such as Los Chancas, the well-known Las Bambas, Tintaya, and Tecapay. And this project has a lot of the same rocks. It was formed in the same era, which is Eocene. It has a similar grade and mineralization and a really similar rock compositions that we see next door. So it's a really, really great analog to world-class mines nearby. And that's why we feel this could be a top-tier asset globally based on the evidence we've seen so far.
Peru is really an important copper region, isn't it, Ivan?
Yeah, Peru is the second largest producer of copper in the world, next to Chile. It's an area that has seen good exploration, but there's a lot of underexplored areas. Peru offers, a lot of exploration, but it's had its tough years and it's had its better years. And right now it's transitioning to an area that's seeing permits come in shorter time periods, seeing communities more amenable to exploration companies coming in, and the government's giving a lot of support to the growth in their country. Mining is about 40% of the GDP in Peru, and it's a critical metal for us globally. So it's a country that's recognizing the opportunity, both in with the communities, but also commercially for the country. So it's a great place to be exploring for world-class mines.
What are you doing to develop that community support, Ivan?
Yeah, so we spent almost a decade, and what we did was something new as a junior, and I think we led it in South America. We brought agricultural programs through government grants into the Andes. So we brought several different programs that involve bringing in cows and red meat to areas where there's iron deficiency. We're bringing in fish farms. We're looking at ways that we could sustainably benefit the community with cooperation with the Peruvian government. These are done through a program called AgroDías. We've done about over $600,000 worth of these programs, and we're bringing another $4 million of grants we're working towards bringing in this region as we look to unlock more communities and expand our footprint in our very large land position to go and explore a lot of robust targets that we see in the region.
Let's talk about the team, Ivan. You've led some successful exits before with some of your past companies.
Yeah, it's been quite a ride. My first company I was part of creating was called Keegan Resources. We found a 5 million ounce gold mine in West Africa, in Ghana. The share price went as high as $9 per share, just shy of $1 billion market cap during that discovery. I left Keegan to go and spearhead Caden Resources, where we drilled 100 holes in Mexico. And back in 2014, we're very, very fortunate to sell it to Agnico Eagle for $205 million. It was a share when we sold it, and we took shares of Agnico. That kind of led the spirit to go and do something bigger and better. We found some geologists from Newmont, and we went out to go find a top 10 mine in the world. And this is one of 3 assets that we located, identified. And it took us quite some time to get drill access and permits, but we finally got there. And then lastly, and very importantly, in the past 6 months, we've had 2 senior executives from BHP join the board, one being the former VP of exploration for BHP, who had been following this asset since 2018. So we have a very, very impressive board with people that are 3 of them that have now held senior vice president roles with BHP, the largest miner in the world. And that's a true compliment to the appeal of the project, but it's also going to have a huge impact on our strategy and the quality of technical work that we do going forward. Historically, we've said we want to act like a major, but in the life or in the mindset of a junior. That's maneuverability, and having these people at the board level gives us that reach, but it keeps our cost capital efficiency quite conservative. But we're getting some of the best that we can in a region where there's a lot of familiarity with the type of rocks we're exploring for. And it really gives us a good validation of the opportunity being as robust as it is.
Can you talk about your share structure? How are you incentivized?
Yeah, so we have 177 million shares out. Personally, this was a company that was spun out of Oren Resources. My financial commitment's been over $6 million. I have just over 6 million shares. I'm leading the charge as management. We have about 5-6% of the company ourselves. In May of 2024, earlier this year, we raised $19.4 million, where Teck Mining took a 9.9% interest in the company based on the prospectivity of the opportunity. And Newmont owns about 6% of the company as well, which is a legacy position from the Oren days when they took over Goldcorp. But everybody's in the room. Everybody has an equity stake, that you'd want there. And there's several other majors that haven't yet come into the investment of the company. They're watching what we do closely, but this is a very, very high profile asset at a very, very opportune time in the copper space. As far as the rest of our shareholders, we've attracted some of the best natural resource investors in the world. We have great shareholders that have been with us for a long time, and we've had a chance to add for the first time some new institutional shareholders to the registry. So I'd argue that it's one of the best natural resource shareholder share structures out there. And a lot of people see the opportunity. A lot have waited some time, but we're looking forward to capitalize on something that's much harder to find than money, which is a major world-class discovery. And in this environment, a major world-class copper discovery as we head towards deficits in the copper.
Talk about that copper opportunity right now. Ivan, you started your career in gold. You had a number of projects that have come out. I know that there's a number of businesses that you've been involved in. Why did you use copper? What is the most appealing about that metal right now?
It's, to find quality in scale and size is extremely difficult, more difficult than it's been in the last 20 years. I'm a gold bug at heart. I love silver, but I'm a copper bull, and I see the obvious need for electrification I see the renovation of the planet. I see cities growing. I see population growing. It's a metal that takes a long time to bring online when you find it. And we're talking 20 to 30 years on the back of a new major discovery that could be a world supplying copper event. So that time frame and that crunch is kind of coming to the perfect storm in the copper space. And when we saw this opportunity, it was first scale and potential for grade of metal that drew us in. But the copper metal is so easy to understand how much it's needed. And we've all seen the electrification start, and we feel this is just the beginning, and the world going to deficit, in the next few years. I think the timing is perfect. So it's about monetizing and also contributing towards the green movement. It's got a dual effect for us, and that's why we're after it. That's why we're after copper. Absolutely love copper and the outlook for copper and the impact it will have if we find a substantial copper discovery.
Lastly, what are some stock catalysts over the next 12 months?
So we have the best catalyst you can have as an explorer. This is why I'm in this business. It's the drive of my passion, and that's through discovery drilling, a new system that hasn't been focused on for copper previously. That's what we're doing. Our drills are turning. We have completed our second hole. We just started our third hole. We're drilling an area that's never been drilled before. We have about 7 kilometers to test in this program that will continue through August of next year. We're going to drill about 11,500 meters. Each hole that we drill could be the next potential filo or large big discovery, and that's the potential in this project. So we're on the edge of our seats waiting and watching. And then the good news for us as an explorer, which has been a very tough place to be as an investor, is we have working capital into 2026. So we're extremely well funded. We have about 30 holes to drill in this program. We just started hole 3. So we'll start getting results towards mid or late September onward, and we look to have the most important catalyst, as I said, which is potential major discovery holes over the next 12 to 24 months as we continue to drill this project.
Ivan, thank you for your time.
Thank you so much for having me.
My name is Michael McCrae. You're watching Kitco Mining.